Hello guys, welcome to a Trading Parrot. I'm gonna do the market close update. As you can see, Bitcoin price has dropped 4% since Trump announced that there's going to be potentially an incoming EU tariff in June. This one potentially being 50%, and that produced a $300 million in liquidations in just a matter of hours. There's also been the SUI validators that freeze the majority of the stolen funds in 220 million with the Cetus hack. That is kind of a positive news. It's good to see that after a hack of these proportions, they managed to at least freeze those funds. So we got kind of a mixed bag with those two news, one slightly positive and one definitely negative. We have a long weekend. I'm not sure if it's gonna be worldwide, but at least here in the UK that applies. This video is gonna be more towards the 4-hour time frame, the daily, the levels to watch out for support in case we see an extended pullback thanks to those news. Remember that there is also the Bitcoin conference on May 27 to May 29, and many people perceive that as a potential sell the news. They talk about things that are super bullish, but there is a coincidence that every time we get this type of conference, there is some sort of pullback. Definitely not a forecast, but something to keep in mind. I have updated the Bitcoin status. Let's go through it. On the 4-hour, I keep it in neutral. This morning, we talk about the RSI breakdown confirmed, and this time the breakdown managed to reach the next level of support. We left the question, price, is it gonna enter sideways? Well, that is to be seen. It depends if we hold the levels where we are currently trading. We'll talk more about that once we get to the charts. On the daily, I still keep it on gray because price action on Friday hasn't ended yet. We are losing support. We are introducing new bearish divergences. We don't have higher highs on the RSI. We have a hash ribbons capitulation signal incoming and a MACD bull cross at the same time. So there are plenty of forces battling at the moment. Overall, we still have a heck of a lot of liquidity on top of our heads. In fact, it's not just a lot of liquidity, it's the largest liquidity pool that we have accumulated in all the price ranges of Bitcoin in history. I don't mean this is the largest pool in history, I mean in all the price range as of now. We are starting the weekend as well, and we are about to close the price on CME. We need to keep track of where we close the price. At the moment is at 108.7 price on Binance and 108.9 on CME Premium. We still have those three gaps below the price at 99.5, 97.3 and 92.600. Those on Binance prices is 99.164, 96.800 and 91.600. The best scenario for the weekend is to get the price going lower and leave a gap to the upside for continuation, assuming that you are on the bullish side. The ideal scenario for the bears is that we hit this red liquidity, we produce another huge CME gap, paving the way to later hit 1, 2 and 3, so those can become your targets, together with the massive oil pan that we have in here from 85 to 106, full of fair value gaps in there. The 4-hour, we noticed this morning that we were battling to break the support. At that point, we were around this red candle, so it was too early to confirm. We were just leaving the spotlight in red there, so you notice what's going on and you keep an eye. Well, Trump made it really easy after that. 111 completely broke down. We left a fair value gap at 110, so I will say now, if the bulls go to 110, hold there and continue to the upside, that's pretty much a V recovery. Notice as well that this level in orange that we left yesterday got hit. That is precisely this ascending red line that at some point the RSI visit and pierced, but it retraced back up and it closed at 108.9. At some point it was at 107.3, and thanks to that we test support. That support also comes from this white line from the previous bear flag. So the bulls could say, well, as long as we defend that white line that we just broke out, this looks like a proper retest of the breakout. If you look at the previous one, we broke out, we went into 104.6 and we came back to the same line where we came from. After that, we just went sideways. So if we were to repeat the same recipe, the price could continue just doing things like that and then break out to the next level in the ladder. I'm laughing because the price action looks so manipulated that there are many indicators that are just going nuts. Breaking back below the previous range, that will be something that we haven't done in the whole rally from 74k, and that could give the bears a little bit more confidence that maybe we could get a deeper correction. I think it's too early to say. Even going into 103.5 and still having all this liquidity in here leaves me thinking, well, at some point we're gonna hit it. On the daily, as you can see, I have drawn different patterns. One of them, I have to give credit to someone that commented on my video telling me there is an ascending wedge. I don't know if you have noticed, and to be fully honest, I didn't notice it. So there's always plenty of patterns, but that one I have to say is pretty cool. Why? Because we had a descending wedge first, we broke out from that below the previous range, below the blue line, we reclaimed and we went all the way to the top of the range. We broke beyond the top of the range, and we have done it in the context of an ascending broadening wedge. So it's more or less the same pattern but reverse. So if we were to repeat the plate, which is not necessarily bullish and we are far from doing that yet, so hold on the horses, this is not a bearish call, it's just a specific scenario that I'm thinking. If we were to do the symmetrical thing that we did in here, that will look like breaking down from this ascending wedge, re-entering the previous daily volume profile range, which is this one in here, and that calls for a move back into 85k. So let me know in the comments how would you feel with that. Try to target the comment towards the scenario, not the one that is doing the analysis, which is what I usually get. So far, so good, right? So if this carry on slightly lower, we still have room to go to 105.7 and retest the breakout out of the previous range. That is healthy. That is building structure and potentially preparing for hitting way higher. Notice that our targets, how far higher they go when the price comes down. So that is good, assuming that we hold levels of support. So far, if we were to close the daily like this is calling for a little bit of a channel to the downside that can come still with some higher prices, with new all-time highs still, and within the context of a channel like this. Too early to say, I'm just saying there is a possibility of that, which I'm monitoring. If this rolling over that we are seeing in here, I'm gonna draw it so you can see it, is doing something like that. If we were to continue doing that, then we get that channel. But there is still a chance, which we have to look now over the weekend, which is very low volume. Hopefully the conference on Bitcoin could bring some really exciting things from Trump that can push the RSI all the way to the top of the range, which we already talked. That 85, that could turn into the 5th time that we hit the top of the range on the RSI in this whole cycle. If we do that, that 85, thanks to this move down on the price, has been pushed from around 118, which is the number that I've been reading in the videos. Now it's being pushed into 132. So people are gonna say, so why don't we go into 40k and we push the target to 500k? Well, if we go to 40k, probably the target is gonna go that way. But that is not how it works, because the lower you go, the more you break structure, and the likelihood of getting that high back with the RSI diminish exponentially. So coming back down pushes the target up, but just stopping here at 67 and then having a spring back into the top of the range is our best chance to get to 85 against the odds of the rolling over that we have here. I'm still leaving the door open because over the weekend there can be some announcement that gets everybody extremely excited. Then we hit that 85, we take all the stupid liquidity in here, and then we are done for a while with all this rally that we have had. I also want to show you something else. I know already is 15 minutes, so it's not gonna be a short update, is that we have this cross buy ratio. I hope I'm pronouncing it well. Here is written. It comes included in the Bitcoin Magazine Pro, the paid subscription. I consider the indicator really good. Look at every rally ends with this at the top of the red, and including the one that we have into the previous all-time high, including the one at 73, and now we are very close to that. We can pinch it 1, 2, 3 times, but you know, when you are there there you are building something towards a potential sideways or a local top. Again, just accumulating data points for you to keep in mind. The CPR, the level of resistance number 2, which we just conquered. Now if we close today like this, we are kind of losing it. Not the same behavior that we have in the previous resistance, where we never ever close below, we just jump on it all the time. Volume continues to come down in here. I think we are done now with this area of green in the volume fight. There is the capitulation signal confirmed. It's a second consecutive one from the one we have mid-May. Now we have one confirmed on the 22nd of May, just 1 week after, and that is just a consequence of the hash rate on Bitcoin going up and down, and the miners probably are into some sort of stress. I don't understand how they diminish the hash rate at these prices of all-time highs. That is something that has me a little bit confused. Why is it happening at this point? Some people use the hash rate on the weekly to get less noise. I think originally it was designed to be on the daily, so I'm gonna keep it like that. Notice that the open interest is extremely high in here on our oscillator. Now we are back at the top. During the rally, we have periods like this. Once we enter very high, we go a little bit sideways. Normally not in banana zone. Getting at the top is an area ideal to look for shorts or to close some long positions. I'm gonna leave some of these charts for tomorrow that are giving very good insights. Do not miss the video. Maybe I'm gonna give it on the Sunday Alpha special. Make sure that you're subscribed to the channel. That is the classic of the channel. I'm also gonna cover some insights tomorrow on the long-term holders and the hodl waves, something I learned that I was doing wrong when I'm reading and interpreting the long-term holders chart. So there is something bearish that I would like you to know, and what is the magnitude of that, of course, as well. We are in extreme greed at 78, so that is just enough of a reason to slap yourself, get 3 coffees, look at the mirror and tell yourself, why am I not looking for an exit? Because that is what a trader should be doing in extreme greed, rather than looking for buying your biggest position, expecting it just to carry on in extreme greed forever. In terms of liquidation pools on the short term, there is very little in here, almost as much as there is at 105.7. Remember, 105.7 coincides with the previous breakout that took us into the all-time high just now, so coming back there is part of the retest that we haven't done yet. 100k is extremely heavy in the short term, and I would love to see that hit over the weekend, but we will see if the event actually brings something really bullish that delays it hitting 100k at some point. I insist that this liquidity is extremely important right there, but I remind you that in all the 1 or 2 years that I've been using Trading Different, there's been times where big liquidity has been delayed to be taken. So even if we are right below it, if there are the right reasons for the market to puke, that liquidity can stay there and those bastards can enjoy being saved by the bell at the last minute. The liquidity is very clear right above the price on liquidation heat maps, and the liquidation of longs that we had today is also very clear in here. It's occurring more or less at similar times. So you got this one, then you have a separation, a fair separation of a few days, and then after again longs back again liquidated. Let's look at the order book. It's gonna become very thin over the weekend, with exceptions we see a lot. We are entering on the weekend with that order at 120 that has been pulled out, put back again, pulled out multiple times since around 21st of May. Below the price, above the price, there is almost nothing, with the exception of this 500 at 115, and the delta has reduced from 1.31, I think it was the maximum, now is just 855. I talk about reducing it at least 1/3 to 1/2 during a strong rally. That is more or less what I tend to see before we get the actual top of a full leg. At some point that is all gone, and you can see how they are defending at the moment that 108 with 0.5 on the ratio. The previous times that they managed to reinitiate the rally, they did it with 0.07, in here with 0.08, so that 0.4, 0.5 that is constantly fluctuating shows some interest that can change at any minute. On fire charts, we can see that we have those orders at 115 million with 115k, and 120k we have 85 million. So not much has changed with the location of the orders, but there's been a change in direction of purple whales and the blue ones. Browns are just going sideways, but the purple whales, they definitely close a lot of positions when they heard about the news from Trump, I guess. With this move that we just had, thanks to the news, we took the first fair value gap going lower. That mild of a move it is, right? We have plenty of them down and we just took one. And we left one on the top of the price that goes all the way to 110,382. Tomorrow, definitely, I'm gonna do a longer video. I'm gonna analyze general markets because there are big movements in here. You can see that even though the RSI on the dollar hasn't put a new lower low, it's still in the territory of the healthy breakout with this big red weekly candle coming back at the same level after 4 weeks going up. That is an engulfing red candle, and I will take it also serious, particularly because it's coming back down below that support. Gold is potentially closing at the highest close in history, and we got plenty of things to talk about. Nasdaq and S&P, we'll see how we close today, and we'll talk about it tomorrow. That's definitely important for crypto to keep an eye on. Thanks so much for watching the video. Enjoy the long weekend if you get one, and I'll see you tomorrow.